So here's my thought on Bitcoin. I'd like to see this thing take out those highs. Here comes the high, we reject it. We come back up, we reject it once more, and if we can't hold, if we can't put in a higher low here, this is make it or break it for me on this position. If Bitcoin cannot hold this higher low at 100,000, that's going to be a good signal for me to take a profit and reevaluate the Bitcoin trade. We had an excellent entry on this trade. We ripped back up to the highs and we tested the highs. I love this setup, but we need to see the follow through. If we do not, we take profits. If we do, we trail stops further and we let that trade run as far as it wants to go. Same kind of concept for the S&P 500, which I have trailed my stop loss into profit. This is an excellent situation to be in when it comes to trading. I am at a point where it is not whether or not I make money on these trades. It's a question of how much money am I going to make on these trades, right? So the S&P trade, stock market just opened up here. Let's take a look at SPY here, which is where I have this trade on. Give me a second. Let's let that load. So here's my my SPY trade, right? There's that trend line breakout, beautiful. Got my stop loss just below market structure here. In fact, I'm gonna go ahead and mark that area just so we have it. You guys will know that I do most of my analysis on SPX 500, the CFD version, just because I like the way the price action works a little bit better than SPY. But I also like trading SPY because I like being able to see the gaps. So, you know, stock market gaps are a real thing. They're really important. So I actually like trading the ETF SPY. Anyways, I'm going to go ahead and just mark in this level here. This is my key area of support, right? So this was the initial entry area, this level of support here. Let me go ahead and mark that. So this was kind of like the key initial entry area. And you can actually see what kind of happened. It actually tested my area, right? So I got long right around here, tested against me, and then shot through this area and is now following through, which is beautiful, but we need to see that continue. So as long as we can hold this trend line, like if we come back and retest, perfectly fine. Nothing out of the ordinary here, but I want to see that level hold and continue taking us back to all-time highs. If we don't, if we break support, the trade has run its course in my analysis, right? And I take a profit on the position. Now, obviously, I could give back some profit on this position if this does in fact break lower. But I'm willing to accept that I could potentially take a smaller profit. Because again, a lot of times people will watch my videos and they'll say, Nick, why don't you take a profit right now? It's up, it's breaking out. Why don't you close? Well, the second you close and you think you've caught and been so smart, you've caught the market perfectly, that's when it does the real move, right? And I'm not saying this is what's going to happen, but it could happen. And I've seen it often enough that the second you think you're closing out high, the market goes much, much higher, right? So I want to stay in this trade. I want to give this trade a chance to run. I'm not a purely technical trader. The S&P 500 is getting a bullish reading on my systematic approach using the edge finder. When looking at economic data, most things are pointing towards the US economy continuing to be strong. The trend is still to the upside. Seasonally, it's a decent time to stay long. Commitment of traders data, a little bit mixed here. Retail positioning, not so great. So if I take minor currency pairs off, this is really my list. So if we take a look at some for currency traders out there, still looking strong for the dollar, I would say. And if we take a look at, for example, let's look at pound US dollar, right? Pound dollar, I believe, had inflation data that came in light this morning. Inflation data came in light. We're kind of bottoming out here, at least for now, but we've got this very strong downward trend line. I would not be surprised if we drew in this level here. I would not be surprised if the pound dollar found some selling pressure right around this area of resistance. So as we come up off of these lows, we had a really pivotal breakout here for the pound to the downside, a retest of that area. Educated guesswork would tell me most likely we continue the downtrend until further notice. How are we getting such a strong reading on the edge finder? Well, we can do a really quick breakdown. The commitment of traders data shows institutional money is very much favoring the US dollar over the pound. And if you don't trust me on that, you shouldn't trust anything anybody says on the internet. Look at this. If we look at the latest commitment of traders data, which again, you can access with the free Edge Finder week, we'll drop that link once more in the chat. I'm going to be annoying with that, but please try out the Edge Finder this week. It is free to everyone who's watching the stream right now. The pound is kind of 50-50. Actually, it's like right on the dot, 50-50 long to short positioning. The dollar, 64-36%. What are we talking about here? Percentage of contracts, long versus short, favor the long side for the US dollar on the commitment of traders data. What is the commitment of traders data? It's institutional positioning, hedge funds, banks, large reporting entities that have to file and report their positionings on a weekly basis. We track that data, we showcase it within our software. It is one of the most popular pages because of the way that we do it. You can see COT data all over the place, but the way we demonstrate and showcase COT reports are what our customers love so much. People love our tools because of the way we've outlined this. We've listened to the feedback of the community on the commitment of traders stuff. We've built what I think is probably the best thing on the internet for showcasing and understanding the commitment of traders data. Here is the latest weekly COT filing. And what I want to show you here is that in the latest report, the US dollar saw a significant decrease in short positions, that's bullish, and a significant increase in long positions. That is also bullish. So very strong reported week for the US dollar, right? So when we look at this, we say, okay, that's very bullish for the dollar. And then we could say, well, what about the pound's latest report? Look at this. These two things are on opposite extremes. The pound on a weekly basis, on a weekly report, like latest weekly report, long contracts decreased, short contracts massively increased. You guys see this? Does this make sense? Type yes in the chat if that COT breakdown right there made sense and was helpful. We look at the commitment of traders data all the time on the live streams because tracking what institutional money is doing can be very useful. And this is, you can see these trends that play out, right? Big money oftentimes is on the right side of these excellent moves. And guess who's on the wrong side of these moves so often? It's retail traders. Retail traders are usually on the wrong side of this position. Let's actually look at retail sentiment history of the pound US dollar. We've got this data. You guys know we come heavy with the data. So check this out. Retail has consistently, this is the net retail positioning, long positions minus short positions. You can see that as the pound, this white line, guys, is the price of the pound US dollar. Price has been going down. Retail has been doing what? Buying, buying, buying. They're consistently buying a downtrend. So institutional money is riding that trend, not trying to be a hero, just riding the trend. And retail is trying to be the hero, trying to call the bottom. And lo and behold, what do we have here? We have a downward trend that retail has been losing money hand over fist, and big money has been trend following and making a lot. Understanding sentiment and positioning is one of the core principles of how the Edge Finder scores assets. So when we see COT column, this software is automatically reading the commitment of traders report and it's generating bullish and bearish readings for each of our favorite symbols.
The Edge Finder is the #1 trading tool for 2025. The Edge Finder is constantly scanning for new data and information to give you the advantage when it comes to trading your favorite assets. Easily stay up to date with the latest sentiment, technical, and economic data, all within the Edge Finder. The Edge Finder scores on 12 different metrics to give an overall bullish or bearish bias, so you can have more confidence when you're ready to take a trade. The Edge Finder is a one-time payment, which means all future updates and improvements come 100% free of charge. Start your new year off right and upgrade your trading with the Edge Finder.
Gold's up 1%. Oh, we got to talk about gold. I have not even talked about gold. Look at this. So you want to talk about something I was wrong about? I mean, I guess I wasn't really wrong because I didn't take a trade on gold. But the other day, I said, I think that gold has a stronger probability of coming back down from these 2,700 levels. And I think we stay range bound. I might have been wrong about that. Let's go look at the Edgefinder score on gold. So it's not on a top setup. So if I include neutrals, and let's do this, let's just do metals for a second so we can look closer at gold. So gold is getting a +4 reading. What's interesting about that is that a +4 reading is 1 away from getting a bullish bias on the Edgefinder. GDP numbers, PMI numbers, those came in strong for the dollar, which are negative catalysts for gold. Retail sales missed. I don't know if you guys saw the new US economic heat map. I'll look at it in a second. Labor data has also been strong. Like, here's my issue with gold. What's holding me back, quite literally, because this is how I trade, I look at the Edgefinder scoring system. Economic data for the US, very strong. It makes me more interested in industrial commodities, copper, platinum. And it makes me more interested in indices. This is my issue. When do you want to buy gold? Well, you buy it when you want, but I want to buy stocks. You have a choice, right? Stocks, gold, bonds, they're competitors with one another. If the economy is good, look at this. If the economy is strong, do you want to buy a safe haven asset or do you want to buy a growth-based asset? I'll tell you where I'm going. It's going into stocks. If something changes, and it could change, if something happens to the economy and we see the opposite case happen, where do I generally want to be? In gold. When our system picks up on growth in the economy, it goes more towards stocks. And when our system, the Edgefinder, picks up more weakness in the economy, it goes more towards gold. By the way, this is typically, how also we could swap out for most indicators here, the dollar. When the economy is really strong, the dollar is strong, and that's not so great for gold. And when it flips, right, gold, when the economy is down, right, the dollar weakens, gold strengthens. So if you ask me, Nick, why aren't you trading gold to the long side? We've got beautiful breakout. Well, we do now, but we've sat through like months of just stagnation for gold's price. I think some of this is also in response to, okay, we've got Trump back in office, and maybe some of the stuff that he's been saying is a little bit worrisome for geopolitical stuff. I know he announced he wants to do 25% tariffs on Mexican and Canadian imports. So maybe there's some drama there. But the point is, when we look at gold here, price action looks pretty solid, not gonna lie. We've had a nice potential breakout here starting to form. And if we close like this today, technicals look solid. In fact, technicals on the Edgefinder are not our issue. Edgefinder is giving it a +2 for trend. Trend is to the upside for gold, at least the way we calculate it. We use moving averages on the daily chart. We're getting a strong trend to the upside. Cool. Where we're losing points for gold is the strong economy component. And this is important to the story. So for me, I'm going to watch gold. And if something cracks, if GDP numbers, if PMI numbers, if those numbers materially weaken, gold is back on the menu for me. But let's stay systematic, right? Let's not, I get it. There's a lot of people who are purely technical traders. but this is probably not the perfect stream for you. If you're a technical 15-minute chart trader, it's probably not the stream for you. If you're more macro focused, if you're more real world focused, like what's really driving prices, this is probably the stream for you. And in this stream, we look at what the economy looks like. And one of the easiest ways to do that, especially if you're trying out the Edge Finder for our free week this week, is to check out the US economic heat map page. This page will allow you to look at the US economy. And I said I would do this on Friday, or Thursday, but I left the state for that bachelor party that I went to. So look, this basically, blue readings basically favor risk on, red readings favor risk off. And that's what I need to clarify here a little easier. Instead of all this text, I feel like this is a lot of text. I'm going to condense it and basically said red readings favor a more risk off environment and blue readings favor a more risk on environment. We had weaker or cooler inflation data. That's solid for the risk on story. Most of this stuff is still blue. So most of this stuff is keeping me long stocks, long Bitcoin, etc. But you guys know I'm going to be watching this heat map like every day to keep an eye on this. Because if it changes, then I could change to, okay, I'm staring at gold and I'm looking for longs. But right now I've made a lot more money trading the indices long, trading Bitcoin long in favor of a risk on environment. I've made a lot more money than sitting around waiting in gold. So gold's starting to look good, but again, I'd rather be late with good signals than just taking a technical breakout just because it's breaking out. I don't love the full story for gold. It's close. You get some weakness in the economy, I'm probably long in gold. But right now, I'm just not quite there. Technicals look great. Nothing against the technicals. Just, I'm a systematic trader. I use the fundamentals. I use the macro to influence my decisions as to whether or not I go long or short. And sometimes it costs me trades. But most times, when I'm aligned with the fundamentals, I make way more money.
We are sitting here 522.01 on the QQQ, flat on the day. SPY slightly up on the day. We got some interesting gaps here. This market has ripped pretty darn hard to the upside since the lows on the 13th of January. And I'm looking at some pretty impressive gaps. So we are not quite there filling the gap today, but it's going to be pretty darn close. And I wonder, are we going to kind of slowly pull back into fill today's gap and then offer some support? I am liking some trades that give me some flexibility and wiggle room to let price fall but still make money. That's kind of where my head is at. I honestly, over the weekend, consumed some pretty interesting podcasts, and I thought, you know what? Maybe this market is now, since it's official, Trump is president, maybe that first burst of optimism is still going to hit the markets. But we are, I don't know, we're seeing very typical Trump action, which is every day there's going to be something from Trump, every single day. And if you think that's not the case, then you didn't remember 2016. So it's already on the calendar for tomorrow or Thursday. So we've got him speaking at the World Economic Forum. Hyperbole, superlatives. Let's see what he's going to say. You're going to have tweets every single day. I mean, Elon Musk couldn't be any closer, other than being an actual cabinet member or in the executive branch. But anyway, it's going to be pretty nuts. I don't know what's going to happen, for better, for worse. But let's take a look at the main things, right? I mean, this market has clawed back in a pretty nice way. I was thinking that this is still kind of a bull trap situation where even if this market does go higher, okay, I'm not really buying big momentum bursts to the upside. I could see this market, getting back towards the highs, but struggling to hit those highs, or struggling to get there, and we still have a FOMC resistance point that the market can't break, and we're right there. So the trades that I'm looking at right now are taking in, those income trades we've talked about a lot the last few weeks, where I'm doing a 1-1-1 trade, or sometimes I'll do a 1-1-1-1, which is basically it's a bear put spread and a bull put spread, and I have a profit trap in the middle. I take the trade for a net credit. I like that trade a lot. If I want to own the underlying, I'll still be willing to own the underlying if price were to fall a bunch. We are seeing a decent rotation out of Mag 7, and there's a nice little market breadth that's happening right now. If we take a look at the advanced decline line, right now we have about 70% of stocks advancing, right? Which, again, rotating out of the top 10 and rotating elsewhere. We look at the sector performance so far. I know it's only a few weeks into trading, right? It feels like it's the first week of trading, but we've already had 2 full weeks of trading, but now Trump is officially president. So we have 10 out of 11 sectors. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Yeah. So 10 out of 11 sectors green on the year so far. And the big run has come out of not necessarily big traditional leaders in the markets. So energy making the big run this year, outpacing the S&P quite a bit, out of the gates almost 10%. Financials up a decent amount. And then we come into industrials and materials and utilities. Now, I'm not exactly sure, what holdings I'd want to have some exposure to. You look at some of the familiar names in the face. If you go to industrials, you're looking at GE Aerospace, you're looking at Caterpillar, RTX, Honeywell, Union Pacific. So, Uber's in industrial holdings. That's interesting. I do have a 1-1-1 trade on Uber, or ratio spread on Uber, which I'll take a look at here in just a moment. So that seems like completely out of place for that stock. You're talking like Boeing, like only airplane maker in the game. It's essentially government subsidy. Union Pacific, you like railroads, there you go. Honeywell is, kind of a household name in the space. RTX, Caterpillar always with construction, global growth. GE Aerospace, which they switched. That was a break-off. So you've got GE Aerospace and GE Healthcare, which is GEH. Those are split off. So, if you want to trade stocks individually, you can look at kind of the bigger indexes, look for some liquidity. But so far out of the gates this year, we have some pretty big names. Uber's already up 11.64%. We got the other ones up, 4, 6, and 9% respectively. So why is industrials leading? Stocks like that. Let's take a look at materials. Okay, look at your weights. Why is Lind PLC 21% weight of material holdings? It's already up 4% for the year. That's a massive holding, though. I would look at the stock, but it's a $418 position. I don't know if I love that much. Sherwin-Williams, Air Products and Chemicals, Ecolab. Now, would I trade these? I suppose I would trade these if materials, like Freeport McMoran is copper and gold. All right. I think gold is a pretty decent play. Copper is a pretty decent play. There's some resiliency there. There's some bullishness there. But I would have to dig deeper fundamentally in the other ones. Like, are they going to benefit from, AI infrastructure? Are they going to benefit from any type of energy infrastructure? Any type of energy reform? Maybe. I don't know. If they don't, then these would probably be stocks I wouldn't necessarily want to have. You can always have exposure to just the sector, because if any of these stocks go insane to the upside or insane to the downside, the sector would reduce the volatility because we do have weighting here. But also, if something performs very well, then we can see that also, lift the sector as a whole. Okay, and then lastly, we'll look at utilities. Again, large weights. Next Era 12.06%, Constellation Energy 8.2. Look at this. Okay, your biggest holding as far as the weight of the utilities sector is down for the year, while Constellation at 8% is up 41% for the year already. Why is that? There was some partnership with Constellation Energy, and I don't know if it was a mega cap of a Mag 7 or NVIDIA. I'm not really sure, but I want to say I've seen Constellation Energy Corp in some headlines with some type of AI infrastructure play. But that's part of the reason like utilities is up 4.16% is probably because this stock is up 41% for the year. Okay, Vistra Corp up 23, almost 24% for the year. We had some pretty big movers out of energy. But again, this is going to be conservative, lackluster, lower volatility than just trading the stocks. Now, people can pick their poison. If you want to be higher volatility, higher risk, then you can be a stock picker. I'm personally not in love with being a stock picker if I want to eliminate volatility or reduce volatility, it is better for me to play sectors, better for me to play indexes. And that's what I'm doing a lot this year. Okay. All right. So we're trading at 600. We're up about 0.47 on the SPY. We're up 0.18 on the NASDAQ. The Dow's up 0.71. Look at that comeback on the DIA. Good stuff there. Russell also making a nice little comeback. Now that we have taken out this recent high, we are pulling back into this kind of big FOMC candle pocket. So could we see upside here? Any type of pullback is, kind of buy the dip on small caps. I'm not sure if anybody is tracking Nancy Pelosi, but she did buy some, I think TEM was the ticker that popped up today. Tempest AI. And we're showing 35 to 46. It's already up 11 bucks. You'd have to follow like a quiver quant. I've got unusual whales here. I can see if I can find the flows, see if I can find some flow data. So let's go dark pool, whales, insider trades. There's something in here. Let's see, option chain seasonality analyst ratings. I think I'm just going to go to whale feed and see if I can find a ticker for TEM. So you got intermarket sweeps going on. These are all buy levels. I mean, these premiums are pretty solid. So these all happened this morning. That's kind of crazy. I mean, this is a lot of money getting thrown in to TEM. I mean, look, the stock's already up. But I'm curious right now. Let me look at it fundamentally. So TEM. Where is it? Tempest AI. All right. So, everyone loves Nancy Pelosi because she is making money hand over fist since COVID. But fundamentally for the stock, I mean, okay, you've got forecasts to grow. Price is going to rally. That's good. Major insider selling. Okay. Currently unprofitable, not forecasted to be profitable. Okay. And then volatile share price. That's enough for me to say, outside of maybe an inexpensive ratio spread or something for credit, I probably wouldn't touch this thing at all. And I don't know what the premiums are. I don't know if it's optionable. I have very little history on it. This goes back to June of 2024. I mean, that doesn't get me excited about this stock at all. But I'll take a look at it. Are there options on it? Let's find out. So TEM, Tempest AI, trade it. We do have some expirations. If I wanted to have, we're trading at a 97.1 IV rank, which is good. That should be decent for selling some premium. Could I do something back here in the low 30s? Let's find out. If I went out 60 days to March, I could do this little guy for 30 bucks. Really? Let's try this. I could do that trade. I could do that trade for $125. And again, this isn't even liquid, man. So I've got a bid price at $220, $1.10. If I got $1 out of this, I'd be willing to take the trade. So probability of profits around 77%. The ownership price would be 30. I'd have to be willing to take ownership here. It's about a 12% chance of assignment. But I wouldn't really take this trade for less than $1. Let me see if there's another way to do it. Nope. I don't like the 1-1-1 style here either. It's a debit on that trade. Unless I did this. 2 cents credit. Nope. All right, never mind. I don't know. The other way would be like just to establish a synthetic position. If I wanted to buy, a deep in the money call, and then sell against it and create a diagonal spread, maybe that's one option. I just feel like the option prices are not going to be that great. So I'll just let Nancy Pelosi have this one. I don't care. I'm not going to buy the stock. I'm not throwing money at it. I don't like the ratio spread. It doesn't give me anything that I want unless I can get a buck for it. Like I said, that's the only trade I'd be willing to do is if I did a buy the 35, sell the 30 for, I mean, this is a little bit better, but now I've got to be willing to take on 300 shares, which isn't the end of the world. 300 shares at 30 bucks. It would be a break even of Simon at 30 minus 5 minus $1.50, let's say. I mean, I'd own the shares at $23.50. So there's an income trade So I get 150 bucks on the trade. It would tie up, if I go to a IRA account, that's going to tie up about 10 grand. So worst case would be a cash account. Let me go, not that one, this one. Yeah, 5,800 bucks would be my tie up. If I did a portfolio margin account, it's going to be a lot less than that. That tie up about $1,300. So would I like this trade enough to take it? Probability of profit around 82%. Chance of assignment around 12%. It's not bad.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.